So let's bring in here David Bassanese, the Chief Economist of BetaShares. And David, I've got to say, thanks for your time. It really was what was in that statement that caused those markets to react in the way they did, wasn't it? Because, you know, there's a change of language here, isn't there?
Well, it's actually what was not in the statement, because the last few months they've been saying they were prepared to be patient before they raise interest rates. And that sentence was missing in action today, and that hence the...
So we can show people this. In fact, we can show some of the actual change in the language that took place. So if you have a little look, it says the board has wanted to see actual evidence that inflation is sustainably within the 2 to 3% target range before it increases interest rates. Previously, it had said it wanted to be patient. It was that word patient disappearing that in many ways was belled the cat, if you like, on where the Reserve Bank thinks interest rates are going to be. That's
exactly right. I mean, yeah, its patience is worn thin. You know, I think the war going on in Europe and the upward pressure on oil prices, energy prices, inflation is going to be higher for longer now, and I think they feel the need to react a bit earlier than they were otherwise thinking.
OK, so you did something today, and I've got your report here, and you basically said, look, I've now brought forward the timing of my first expected interest rate hike from September to June. Why did you do that?
Well, I thought they were going to... Basically, they're waiting to see wage inflation accelerate. It's still in the low twos. They wanted to get up to 3.5, and I thought they would wait for another 2 wage price index reports that come out quarterly, and that wouldn't happen until September. But again, given the change in the language today, and they explicitly said they're looking at the next wage and price numbers, it seems to me they're prepared to go after only one statement. So hence, that will come in May. And so my timing is now June.
So we should explain to people here that in many months, these statements don't change month to month to month to month. There's little subtle changes here and there. Here's another example, but this was a wholesale change. So this is about wages that you talked about. There are some areas where larger wage increases are occurring. Given the tightness of the labour market, a further pickup in aggregate wages growth and broader measures of labour costs is in prospect. This is a brand new paragraph. That wasn't there previously.
And I think what this points to is they're probably getting anecdotal reports from businesses themselves.
Well, hallelujah that they're doing that finally, because they've literally been living in a hole for the last little while if they didn't know there were wages pressures out there.
Yeah, well, that's right. I mean, so the reports are feeding through, and I think they do anticipate it's going to be reflected in the next official wage numbers as they come out.
And it seems as though one of the Reserve Bank members or governors or directors has actually got a car that they've had to fill up with petrol. Because if we show you this one as well, this is the other new one that's come out. And you can sometimes imagine that the Reserve Bank's waiting for the empirical evidence. But of course, we only get inflation on a quarterly basis. Here it is about higher petrol costs equals higher inflation. The main source of uncertainty relates to the speed of the resolution of the various supply-side issues, developments in global energy markets, and the evolution of overall labour costs. The interesting word there that I find is uncertainty. It shows that they're actually grappling with what happens next.
Yes.
You know, when does inflation, is it short term, is it long term? That's an interesting thing, that they are uncertain about the future of the economy and the future of inflation.
That's right. I mean, their expectation was that the inflation pressures we're seeing would moderate to some extent, but now they're unsure. And I think the other element now is they're worried about inflation expectations picking up and then embedding, higher inflation for longer. So I think that, so basically they want to be seen to be acting a bit earlier than they previously expected. I think the other interesting thing, just quickly, is that they've seen what's happened in the United States. United States inflation took off last year, a lot more than expected. They didn't raise interest rates. Now the US is under the gun to raise rates quickly to get inflation under control. And I think the RBA's looked at the US evidence and say, you know what, we don't want to be behind the curve. So maybe we've got to go a little bit earlier than we previously thought.
Well, the argument is they've been way behind the curve up until now. So tell me this, is all the forecasts about how far rates rise and when they rise. You now say June. How many rate rises will there be in this cycle and how long does it last?
I think they'll raise rates 3 times this year. So I've got June, September, and then either November, December. I still struggle to see it going much beyond 2%. I think given the debt levels in Australia, particularly household debt, the markets are pricing in 3. So the markets are quite aggressive. So I still think the markets are too aggressive. But I think, 3 moves this year and maybe 3 moves next year.
And yet the budget did say that it anticipates that rates start moving in June and don't stop increasing until 2024. So in many ways, that's an even more aggressive outlook based on what the markets are saying as well.
Well, the budgets are forecasting what the markets have already priced in. And so the markets are pricing in aggressive rate rises. And so the government is basically accepting that. Many economists, myself included, look, we haven't been as aggressive with the market, but so far the market's been right. The market's been aggressive and the RBA is moving in the direction of the market, not the other way around.
Time will tell, there's no doubt. But the one thing we do know, rate rises are coming and they're coming pretty shortly. David Bassanese from BetaShares, many thanks for your time on the program today.